Welcome back to AI World. This week, the crypto space saw major moves that could reshape how digital assets interact with traditional banking. Ripple, Circle, and BitGo are now a step closer to becoming US banks, thanks to conditional regulatory approval. We'll break down what this means, look at Hex Trust's wrapped XRP, and explore the ripple effects across the industry. If you want to stay ahead in crypto, you're in the right place. Let's dive in. The big headline: Ripple, Circle, and BitGo have secured conditional approval for national trust bank charters from the OCC. This is a major milestone, not just for these companies, but for the entire crypto industry, signaling a new level of legitimacy and recognition from US regulators. This puts them on a direct path to becoming federally regulated banks in the US, opening doors that were previously closed to crypto firms. For years, crypto firms struggled to access basic banking services, often facing account closures and skepticism from traditional banks. Many were forced to operate in the shadows, unable to fully participate in the financial system. Now, with OCC approval, these companies can work toward becoming banks themselves, gaining access to the same financial infrastructure as legacy institutions. A national trust bank charter isn't a full-service commercial bank license, but it allows them to offer custody services for digital assets under federal oversight. This means they can securely hold and manage cryptocurrencies for clients with the backing of federal regulators. This is a huge step toward legitimizing crypto in the eyes of regulators and institutions. It's a sign that digital assets are being taken seriously at the highest levels of finance. For Ripple, focused on cross-border payments, a bank charter could make their tech more appealing to global banks. It could also help them expand their network and offer new services to financial institutions worldwide. Circle, the company behind USDC, gains a stronger regulatory framework for managing reserves, boosting trust in their stablecoin. This could lead to greater adoption of USDC by businesses and consumers alike. BitGo, a leader in institutional custody, gets formal recognition that could attract more conservative investors. Pension funds, endowments, and other large institutions may now feel more comfortable entering the crypto space. Together, these moves signal a shift from crypto's Wild West days to a more mature, regulated industry. The landscape is evolving and the rules of the game are changing. It sets a new standard. Other crypto companies may now feel pressure to seek similar charters. Regulatory clarity is quickly becoming a competitive advantage. This is about building the infrastructure for mainstream crypto adoption. The foundation is being laid for a future where digital assets are part of everyday finance. The industry is moving from niche to a regulated part of the financial ecosystem. Crypto is no longer just for early adopters. It's becoming accessible to everyone. The impact? A more competitive, trustworthy, and integrated crypto landscape. Consumers and businesses alike will benefit from increased security and transparency. The days of operating in regulatory gray areas are fading. The industry is stepping into the light, with clearer rules and greater accountability. This is the start of a new era for crypto in the US. The doors to mainstream finance are opening wider than ever before. The OCC's move could inspire global regulators to follow suit. Other countries may look to the US as a model for integrating crypto into their own financial systems. It's a foundational shift, not just for these three companies, but for the entire industry. The ripple effects will be felt for years to come. The next phase of crypto adoption is being built right now. Every new charter, every new regulation brings us closer to a fully integrated financial future. The bridge between crypto and traditional finance is finally taking shape. What once seemed impossible is now becoming reality. And it's happening faster than anyone expected. The future of finance is arriving, and it's bringing crypto along for the ride. Let's talk about that key word, conditional. In the world of banking and crypto, this word carries a lot of weight. It's not just a formality or a box to check. It's a signal that the journey is just beginning, not ending. The OCC's approval isn't a free pass. These companies must meet strict requirements before becoming full-fledged banks. Conditional approval means the OCC is watching closely, and every step is under scrutiny. They need to prove they have enough capital, robust risk management, and strong compliance systems for things like AML and KYC. Every detail matters, from how they handle customer funds to how they report suspicious activity. Regulators want to see real-world systems in place, not just promises. It's about demonstrating that these companies can operate safely and soundly in the real world, not just on paper. This is a probationary period. typically around 18 months, to meet all conditions. During this time, every action is monitored, and progress is tracked closely. If they succeed, they get the full charter. If not, approval can be withdrawn. There's no guarantee. Success must be earned, not assumed. The process is intense, with regular OCC examinations and high standards for safety and soundness. These reviews are thorough, and the bar is set high. The reward? Federal preemption. One national license instead of 50 state ones. That means streamlined operations and the ability to serve customers across the country. That's a huge operational advantage. It can save time, money, and resources, giving these companies a real edge. This rigorous process separates these companies from regular crypto exchanges. It's a higher standard, and not everyone can meet it. It's about integrating digital assets into the federal banking system, not just checking a box. The goal is to build trust and credibility with regulators and the public. The conditional phase is a bridge between crypto's fast-moving innovation and the stability of traditional banking. It's a test of whether these two worlds can truly connect. Success here sets a precedent for the entire industry. It shows what's possible when innovation meets regulation. Regulators are demanding high standards, but the payoff is significant. The companies that make it through will help define the future of finance. This is a test of whether crypto companies can meet the bar set by traditional finance. It's about proving they can play by the same rules and win. The stakes are high, and the industry is watching closely. Every move is under the microscope, and the outcome will be felt far beyond these companies. If Ripple, Circle, and BitGo succeed, others will follow. Their progress will open doors for the next wave of innovators. This is the path to mainstream legitimacy for crypto. It's about earning a seat at the table with the biggest players in finance. The outcome will shape the regulatory landscape for years to come. What happens now will influence policy, innovation, and competition. The pressure is on, and the future of crypto banking hangs in the balance. The next chapter for digital finance is being written right now. Now, let's shift to Hex Trust and wrapped XRP. Hex Trust will issue and custody wrapped XRP, WXRP, on Ethereum and Cronos. What's a wrapped token? It lets you use a cryptocurrency on a different blockchain. Here, XRP from its native ledger is tokenized as WXRP on Ethereum, backed 1-1 by real XRP held by Hex Trust. Why do this? It unlocks Ethereum's massive DeFi ecosystem for XRP holders. Now, XRP can be used as collateral, for lending, or to provide liquidity on platforms like Uniswap. This expands XRP's utility far beyond payments. Hex Trust's role as a licensed custodian is crucial for trust and legitimacy. Launching WXRP on both Ethereum and Cronos maximizes reach and taps into two major DeFi communities. For XRP, this addresses long-standing criticism about limited use cases. It could increase demand and lock up more XRP in DeFi contracts. Wrapping XRP is like giving it a passport to the global DeFi economy. It's a bridge connecting XRP to a much larger world of financial applications. Interoperability is key, making blockchains work together and share value. Projects like Wrapped Bitcoin have already proven this model's success. Hex Trust is aiming to replicate that for XRP. This move could be a game-changer for XRP adoption and integration. It's another sign of crypto infrastructure maturing. The future is about seamless movement of value across blockchains. Step back, and you see a bigger picture. Crypto is maturing fast. What once felt like a fringe movement is now shaping the future of global finance, with every new development sending ripples across the industry. The OCC's conditional charters and moves like Wrapped XRP are pushing the industry toward integration and regulation. These steps are more than just headlines. They're signals that crypto is being woven into the fabric of the financial system. Regulatory clarity from the OCC offers a blueprint for how crypto can work with, not against, the system. It's a roadmap for both startups and established players to follow, reducing uncertainty and risk. This could encourage other regulators in the US and globally to provide similar pathways. As more countries take notice, we could see a domino effect of regulatory progress. The SEC's ongoing battles with crypto companies highlight the need for unified regulation. Fragmented rules only slow down progress and create confusion for everyone involved. Clear rules can actually drive innovation. Companies invest more confidently when they know the boundaries. When the rules are transparent, creativity flourishes, and new ideas can take root. Institutional capital and new products could flood in once trust and legal certainty are established. The doors open for banks, asset managers, and even pension funds to participate. Imagine crypto-native wealth management, retirement products, and more, all built on a regulated foundation. This could transform how people plan for their futures, making crypto a part of everyday financial life. For mainstream users, regulated banks handling crypto could make adoption much easier. People could access digital assets through familiar institutions without needing to be tech experts. It lowers the barrier for everyday investors to enter the space. Suddenly, crypto isn't just for early adopters, it's for everyone. Interoperability, like with wrapped XRP, makes the ecosystem more efficient and connected. It's about building bridges, not walls, between different networks and communities. It breaks down silos and lets value flow freely between blockchains. This seamless movement of assets is key to unlocking crypto's full potential. The combination of regulation and technical integration is powerful. Together, they create a foundation for trust, growth, and collaboration. It makes crypto more trustworthy for outsiders and more useful for insiders. The benefits ripple outward, touching everyone from casual users to industry veterans. This feedback loop of innovation, investment, and adoption could push crypto into the mainstream financial world. The momentum is building, and the pace is accelerating. The next wave of users may come not as DeFi experts, but as everyday investors. People from all walks of life could soon be part of this new financial era. The groundwork for the future of finance is being laid right now. The industry is evolving, fast. Every day brings new opportunities and challenges, and the impact will be felt far beyond crypto. The changes happening today could redefine how the world thinks about money, value, and trust for generations to come. Let's quickly hit a few other stories from this week. Layer 2 scaling solutions for Ethereum, like Arbitrum and Optimism, are booming as users seek cheaper, faster transactions. This shift is changing how the Ethereum ecosystem operates, with most activity moving off the main chain. In NFTs, a major luxury brand launched a collection with real-world utility, showing NFTs are evolving beyond digital art. NFTs as membership cards are becoming a powerful tool for community and loyalty. On the CBDC front, several countries advanced their digital currency pilots. The rise of CBDCs could reshape the regulatory landscape for crypto and stablecoins. Will they coexist or compete? That's a key question for the future. A major DeFi lending platform proposed a protocol upgrade to improve risk and capital efficiency. These technical improvements are the lifeblood of DeFi's resilience. The pace of innovation in crypto is relentless, from regulation to code. Even small changes can have big impacts on the ecosystem. It's not just the big headlines, incremental progress matters. The industry is constantly learning and adapting. That's what makes following crypto so exciting. Stay tuned for more updates. Let's keep an eye on what's next. That's a wrap on this week's Crypto Deep Dive. From new crypto banks to expanded XRP utility, the industry is evolving fast. The lines between crypto and traditional finance are blurring. The journey of Ripple, Circle, and BitGo will be a key test for the industry. What do you think? Will these moves reshape crypto's future? Will wrapped XRP take off? Drop your thoughts in the comments. Thanks for watching. Subscribe for more breakdowns. See you next time.